Our first guest, Tony Drake, CFP at Drake & Associates, tells us his thoughts on this market action and selecting for your portfolio. But before we get to that, tell me your big picture on your thoughts on today's market.
Thanks for having me, Nicole. Obviously, it's a wild time in the markets, great time to do what we do. And, we're navigating a market right now shaped by decelerating inflation. You got some pretty strong consumer spending, maybe softening a bit, but a Federal Reserve that's talking hawkish, but they're walking a lot more cautiously. So I think the big question isn't what is the Fed going to do? It's, what's already priced in. And if you're going to put capital to work, where is that capital going to get treated the best? And in short, it's no longer a kind of, tide lifts all boats market, right? You have to be selective. Strategy is important. And you really have to be selective about what you're picking. I think we're living in a market where disinflation is very real, but the Fed's inflation anxiety hasn't fully caught up to that reality. So going to be really interesting. Be great to be a fly on the wall for that meeting between the two of them today, but we'll see what comes out of that in the coming days.
Yeah, I just saw that headline cross. I mean, I can't even believe it. I didn't even realize they were having that conversation because Jay Powell has been asked if he spoke with President Trump, and the answer was no. But apparently they did have a meeting about the economy and interest rates. So it'll be very interesting to see what the next sentence is out of the Federal Open Market Committee chair. So when you're selecting for a portfolio, you're saying you have to be really selective. What are you looking for?
Well, I think so much of it depends upon, someone's time horizon, right? And this economy is really a tightrope right now. I'm not sure I'd want to be in Jay Powell's shoes, but, growth is slowing, but it's not completely stalling, right? So they're in this holding pattern. You have core inflation easing, but wage pressure is still there, and I think policy lags is what's really hitting us, right? I mean, maybe there's an argument to say that growth is slowing a little bit, but it's not collapsing. So the underlying economy may not be that bad because it's absorbing a lot of things that's getting thrown at it. But, every couple of days we get a different announcement about tariffs. We know the markets like certainty, and that's not what we're seeing lately, and that's caused it to be really challenging.
So when you go for picking the stocks, before I get to your fixed income strategy, what kind of stocks have you been picking specifically? Is it a sector? I know you're looking for cash flow and the quality balance sheet. What names or sectors can you recommend to folks?
I think the sectors we have our eyes on right now are industrials and infrastructure to start with. From a manufacturing reshoring to clean energy build-outs, this industrial approach is really the backbone of the economy, and that's starting to get a little bit stronger. And it's not just stimulus driven, it's also strategic realignment. CapEx is replacing buybacks, and that's really a generational shift that we haven't seen in a while. Now, everybody's talking technology, right? We've all seen the news about, NVIDIA really boosted the market, seems to be cooling off now a little bit today, but you have to be disciplined with earnings when it comes to technology. There's no doubt the AI wave is real, but I think the winners are those who can scale with profits, and investors should really focus on cash flow, not just the code or the technology. We've kind of moved away from growth at any cost to growth that pays as it goes along the way. And then we really are interested in the core in energy and commodities. Oil, copper, lithium are really underinvested, and geopolitically, they're very essential. Supply chains remain tight, and the energy transition is, really intense right now. But a lot of areas we're going green, but we're using a lot of gray and black, a lot of energy to get there. So there's some real opportunities there.
Understood. And then when it comes to fixed income, what's the strategy there?
Yeah, I think from a fixed income perspective, again, it's all about time horizon. We work with a lot of retirees, and the yields are pretty good, right? We're seeing those come off a little bit today, but for the folks in that stage of investing, locking in those yields, CDs, treasuries, high quality munis are offering real returns again. And I think folks really want to think about rebalancing for resilience. Don't chase growth. They really want to think about blending income with stability and having some inflation hedges. So sometimes that means revisiting withdrawal strategies. Sequence of return risk is real right now, and being flexible when it comes to your income plan. Those retirement portfolios need to behave more like pensions and a lot less like speculation in today's market.
Right. When you talk about having the discipline, where does that come in? I mean, the volatility we've seen, have you had to really exercise some patience and discipline?
I really think you do. For a while there was, it seemed fairly simple, was buy the dip, right? But I think investors really need to reassess their equity exposure and maybe tilt towards sectors with real cash flow and secular tailwinds. And to your point, that takes some discipline sometimes, right? And increased quality within that income area we're talking about. You have those rates peaking, duration risk becomes a lot more manageable. So folks want to think about diversifying with real asset commodities, infrastructure, even farmland is kind of back on the table. And this isn't a time to swing for the fences. It's a time to, maybe bat for the infield, try to get those singles, those doubles, and be a little bit smart about where you're going with your capital.
Yeah. The Fed's next policy meeting will be in June, and it has been reported now that Jay Powell did meet with President Trump for the first time since Trump has been back in office, and that their meeting, they discussed economic developments for growth, employment, and inflation. And while they did not necessarily discuss monetary policy directly, Powell did say that they're being careful and objective and non-political, etc. What do you think the Fed should be doing? Their next meeting is scheduled for mid-June.
Yeah, I'm just afraid we don't have the data yet. When we look at the stance that they've taken, I think it's going to be a continue to wait and hold. I think so many folks are still trying to figure out what's the long-term impact of these tariffs, right? Is this a great shift for our economy and we just need to survive some turbulence in the short term? Or are we really throwing what's not so bad off kilter? I think the market's really entering a new chapter, but not a crisis. But that makes it challenging for the Feds, right? It's more of a recalibration. Easy money era seems to be over. But, the easy beta era is also fading as well. So it's not a full reason to retreat from the markets, I think, but it's a reason to get more selective. And right now, that Fed policy is unclear. Some of the policies out of Washington aren't very clear. So price discipline and patience, those are the advantage right now. I think you want to invest like the world is changing, because it really is.
Right. All right. Good to see you. Thank you so much, Tony Drake. Appreciate it.